Happy Thursday.
Ah.
Okay, so.
Good. 2 more points.
Good evening, guys. So we are Team A, and we represent our perspective throughout the course project Globus. Next slide. So throughout the semester, we each took different roles. For me, I was the Chief Operating Officer.
I was the Chief Marketing Officer. I'm Raquel Gonzalez.
And I'm the Chief Financial Officer.
As you can tell, we divided in this way because we're each good at different things. So we thought that mutual knowledge is always bigger than individual knowledge. That's why we divided in this way. So
Smart.
let's move on to today's agenda. The first one is strategic plan, how we manage our strategy. This is just a preview. So for our cameras, our strategy was the global best cost, meaning that we will always have a strong PQ rating with a lower cost than our competitors, and we want to offer the best value product to our consumers. So why did we choose this? Because we thought that the camera market is going to be super competitive. Like everybody is going to have similar PQ ratings, similar spendings, and similar everything. So we think that in a price-sensitive market, we have to stand out. So we have to provide the best value, because for cameras, it's not like drones, it's not like about quality first, it's about value first. And how we're gonna do it, so at first, we really want to set up the warranty to be moderate, not too crazy, like 360 days. It's like, the cost is crazy. And for cameras, the pricing, we want to be in the industry average in general. And for the marketing spendings, we really tried to cut the marketing spendings from year 6 to year 8, because it was the early stage, and then we really want to control that. And then for R&D, we want to spend a constant, like, increased amount of money in R&D, because we think that R&D will help us with our PQ and our overall performance in the future years, especially the end game. And last but not least, we want our cameras as the value choice, again, emphasizing. And then next slide. Because for the camera segment, we have to talk about our special contract strategy. This is where we think we got more demands of our cameras, especially in Asia and Latin American regions. So what we did was that we wanted to prevent other people from getting the special contracts, especially for the Asia and Latin America regions, because we knew that from year 6 to 8, we observed that we didn't have much market share for cameras in Latin America and Asia. So we didn't want like market leaders like TV to get the contract, so that you guys are too strong that later on we don't have any room for improvement. So that's one of our strategies for the special contract. And you can see that we have set up like a range for the special contract, like the discount. But our main focus is still getting North America and Europe, because we don't want anyone to steal our market share.
Yeah.
And our results reflect positively, like we got almost every special contract for North America, but we gave up on preventing others getting later years, because we realized that we weren't making any profit. We were spending more money rather than making profit, so we stopped in Asia and Latin America regions. Next slide. Moving on to the drones. We always wanted to make a premium product for drones, starting from the beginning. Like our PQ was 6.0, like year 6, and the cost was like crazy high. So for drone strategy, we're not expecting high payback, like very quick payback. In the first few years, we were being patient. We want to be patient, because we know that by the end of the game, everybody is going to increase their PQ, increase everything. So we want to increase in advance. So in the later years, we have more room to spend more money, like access cash in marketing rather than product design. So that's our strategy for the drones. And our vision is always like, we don't want to really care about the market share, especially for Asia and Latin America, because we know that Asia and Latin America is very price sensitive, which proved our point too. So we didn't want to be really, stopped by that. So we just continuously invest in our good quality, and the results show pretty good as well. And now Rachel will tell us more about the product strategy and the marketing, most important part.
Okay, so I want to talk about the camera product strategy. So basically, as Sarah mentioned, we were trying to follow.
Thank you.
we were trying to follow a best cost strategy, therefore we wanted to gradually improve our product design, not like drones, which I'll explain later what we actually did. So as you can see, we try to improve our PQ, and we did this by gradually spending money on R&D too. And also we noticed how like image quality, display and everything was costly, but also increased our PQ, and that's when we like changed throughout the time when we noticed like we weren't being too efficient with the cost, and I will explain later on a chart. But we try to maintain our strategy by also like seeing our results in the following years. Next slide, please. Okay, so R&Ds, we're gonna go more in depth in future slides, but you can see how like every year varied. We started spending a lot of money in R&D, and then we realized that it wasn't being efficient. And since we were trying to like show a best cost strategy, we didn't really have to like put a really premium design on our product. Like we wanted our price to reflect our quality. So therefore, we tried to do this gradually, and it changed a lot. At the end, we ended up spending less money in R&D than how we started. And you can see this in the table. I put the cost comparison into the benchmark. So on the right is our teams one, and we always stayed in between the average and the high industry averages, but at the end you can see how we like were in between the low and the average, and that's how you can see like we started to put more money, we started to cut cost on the product designs. For example, we noticed that the display was super costly, and we noticed that we can do other things instead of actually like increasing
Cut
the
down on it,
amount.
right.
So, next slide please. For our marketing strategy for North America and Europe, so we put these two regions together because we treated them sort of in the same way as we did. For example, we noticed that retailer support was super important, and we increased it throughout the years gradually. We wanted more availability and visibility too. However, the advertising budget was one of the most important indicators, and for year 9 we noticed that we weren't spending like
Anywhere near it.
yeah, and we weren't like, our results reflected this, like we didn't have much market share and we didn't know why. And then we noticed that advertising budget was super important. And for website display, we also did some improvements. However, we tried to spend more on advertising budget for these two regions. For price, so we always wanted to stay in the average price since that was our strategy since the beginning. And we managed to do that. We didn't like increase price like crazy. We like relatively did that year by year. And for market share, we also ended up increasing our market share for both of these regions. And you can see in this chart how first we weren't spending like money at all in the advertising and marketing as a whole, and that reflected in our marketing share. And then over like in the year 9 when we noticed like that was a turning point for our company, that's when we like actually spent much more money and our market share started increasing in a more like consistent way. So our marketing strategy for Asia Pacific and Latin America was sort of the same, but with different volume and with different numbers, because we noticed that obviously these two regions were more price sensitive, and we couldn't implement like the same prices we had, because we got like
Right.
much more higher prices in North America and Europe, and like if we increased our price, we lost all of our market share. And in the first years for this, we actually didn't know if we wanted to like let go of these regions or not, because we were like
Yep.
losing a lot of market share and weren't really earning some money. But we also noticed obviously that here advertising budget, as we increased it, it wasn't really like more like a bigger investment as it was for North America and Europe. Like for here, website display had much more impact than advertising budget, and for North America and Europe it was the other way around.
Right.
Because also we noticed that direct costs in these regions were super high, so we wanted to spend more money on retailer support because we needed like this partnership. And next slide please. For price, we maintain it relatively low compared to industry average and also to like the other two regions. For market share, for Asia Pacific we stayed a little bit the same, and then for Latin America too. And you can see we struggled again in the first years to like get some market share. And then in year 9, when we were investing more money in the marketing, obviously the marketing cost was much more high compared to the first years, but our market share is reflected in this cost. For product strategy and drones, since we always knew that we wanted a premium product, we knew that we needed to have a price that reflected this product. And since for performance and quality improvements, we always try to maximize our overall design of the drone, which at first was like counterproductive because we believe we started too roughly. For example, with a PQ of 6.0, like we weren't gonna get lots of market share.
Right. Going
Because we
higher.
knew like probably the other companies wouldn't have like a really high price like we did. But we knew that since the start, therefore our product reflected our price. Next week. For here, R&D, we spend a lot of money year by year. This helped a lot improve our PQ over the years. When we noticed in the first year after the results that we had much more higher PQ than the other teams, that's when we say like, although we want a premium price, we need to like now start increasing gradually because there's no way like another team is gonna be like from 4.2 to like 6.2, and we did that. So you can see also in our cost comparison with the benchmarks that we were always every year on the industry high side. And this goes directly with like our overall strategy. Now for our marketing strategy for drones for North America and Europe, we did the same as the cameras, that we combined these 2 regions and sort of treated these 2 regions the same. We noticed here that retailer recruitment was important, obviously, and search engine advertising was the one that we like invested much of our money. Like for North America, you can see how we started in 1,500 and we ended up in 10,000, and also for Europe. And this really impacted our PQ too, and helped us position in a premium like range. And for total marketing cost, it was super expensive, but we knew that from the start, and we knew like what we were working with, and we knew that we needed to be patient, as you're gonna see like in the next slides. That in the first years we struggled, but we knew that was gonna happen most likely. So we tried to keep the prices comparatively high compared to the industry average, but always staying true to our strategy, which was premium product. So that matched our high PQ since the start. And for market share, we were able to increase it more for North America than in Europe, but we at the end ended up being consistently growing as the years went by and as we spent more money in R&D. And for Asia Pacific and Latin America, it was the same. Search engine advertising, we spent much more money, like much more. And this helped us also gain some more visibility, especially in price sensitive markets, where we also spend more money in retailer recruitment. We thought that these 2 like indicators went hand in hand. And for price, although our price was high, if you compare our price to the other 2 regions, it's a major difference, and it's obviously because this type of regions are not willing to pay this like a huge amount of money, and that's reflected in our market share. You can see we were really spending almost no money in marketing, and also we had like almost no market share. We thought we were gonna lose all of our market share, and that's when we tried to benchmark and spend more money in marketing, and that's when we saw more results.
Okay, moving on to the next part, which
Good
is
job.
facilities. We didn't really change much in the facility except for year 9. So what happened in year 9 is that we added 30 more workstations for cameras, and 20 new workstations for drones. The reason why we did it is because of special contracts, as I mentioned earlier.
The volume.
We wanted to prevent other people getting it, so that means our demands will rise and our overtime will rise, and the overtime cost is huge. Since we want to be a best cost in cameras, we have to really cut this. So that's why we added more stations, and you can see the overtime for year 9 is 0. And And then we also did this because we were expecting more sales and more demands in the end game, like years 10 to 12, because we knew that everybody's going to raise their PQ. And we know that our drones, we have a chance of getting it like a higher market standing. So that's why we did this, and I'm glad that we did this because this strategy really helped us to have more access cash so we can spend it in areas where it needs more improvement.
Gotcha.
And then for compensation, our objective was very straightforward. We wanted to be ethical, we wanted to be responsible for our workers. So you can see that every year, this is just year 6 to year 9, but next slide is the following years, but you can see that we spend the most money in the total compensation per employee. Like we spend the most money and we get the highest payback, which is productivity, the highest. And I think like the most interesting thing is the labor cost. Like we're always in like average, below average, like not the highest for sure. So this also kind of matches our best cost strategy, how we really treating our employees good, does not bring us more cost, it actually lowers our cost. So this is what we found out. And our overall compensation strategy, like I think we were the nicest to our employees in the industry. So next slide is the same, you can just look at skiing through the numbers, it's proof. Yeah. Now moving on to the most important person in our company, the financial guy, Danny.
Okay, so I want to talk about the overall performance first. So as we can see that our total revenue and net profit has a steady growth every year from beginning. And our earning per share, return on equity, and stock price also increase every year, and that shows our investor trust and expectations. And next, I want to talk about the capital and structure and risk, because every company has a long-term loan at the beginning, and that was related to the debt to equity ratio. So our focus is not to add some extra loan in the later game. So we just try to pay back to the default loans year by years, and try to decrease the debt to equity ratio by increasing the credit rating, because the credit rating were related to the interest rates of the long-term loan.
When you say payback, you mean dividends?
Yes,
Okay.
Oh, no, not dividends, the loan interest.
Oh, the interest, okay.
Loan interest. So we try to increase our credit rating by not borrowing new loan,
Okay.
just by pay back to the default loans. And if it's not necessary, we don't need more extra money. And you can see that our credit ratings even goes to A+, and the debt to equity ratio goes down year by year. And this one is the accidents, and I will explain it later.
You said accident, okay.
It's not kind of accident.
Okay.
Okay, so our investing strategy of our camera, we focus on the profit margin mostly, because the profit margin is related to the cost, and we can see that on graph 1, our R&D expenditure of camera is always much higher than the industry average
Yeah.
in each year. And we have results of it, because look at the graph 2. Our cost of assembling the camera at the beginning, before year 9, is always higher than the industry average. But because of the consistently investment on the camera R&D expenditure, our cost is going down year by year, and the industry average is going up.
Yep.
But after year 9, we have the lower cost of assembling the camera, but we have a higher PQ than we have the highest PQ.
Highest, yep.
Highest PQ. So that is cost effective.
Good.
And the investing strategy of the drone. It's also about the profit margin, but there's a little bit different from the camera side. We noticed a special point that the direct sales of the delivery cost is higher, much higher than the third-party sales in the Europe, Asia, and Latin America. So at year 7, we figured out this point, and year 8, we made some change that we invest more on the third-party retailer in each region. You can see that the trends, we invest more on the third-party retailers in all 3 regions, and we try to decrease. We try to make the third-party retailer as our main sales channel rather than direct sales.
Right.
And we also try to find a balance between the direct sales and the third-party retailers. And the second point is also about the R&D expenditures. Like we each year we invest more than the industry average on R&D, because that will decrease our cost on the drone. But at the same time, we have a consistent increase on the PQ rather than upgrading the features of the product itself. And I think it's very cost effective, but I think it's a long-term investment, because at the beginning it is struggling because we need to invest a lot into it, and our financial performance doesn't look well at the beginning, but in later years will perform better. And last, I will talk about the liquidity and shareholder returns. So at the beginning, we focused on the high-end products, a high-end market of the drones and the high cost of the cameras. So we spend a lot on the product design and the BPO and the R&D expenditure. So that's explain why we have less cash on the first year, less cash than the previous year.
Default.
Yes. And later we have a better sales, and we figured out we need to invest more on the marketing, so our cash on hand increased year by year. And at year 9 is our business turning point, and we did a lot of changes that made our cash on hand increase a lot. It's like double. And at year 11, we know that Globus is a game and it has an end date, so we try to make our score as high as possible. And at year 11, we figured out that it's really hard to adjust any other data to increase the earnings per share.
Return on equity.
Return on equity and earnings per share. It's really hard to adjust any other data, so we try to repurchase some stock, like 1,500K out of 20,000K. It's not a lot. That's why we have a large decrease on the cash, and also explain why our return on equity increased a little bit on year 11. And at year 12, I think all of our financial strategy and our data, everything is healthy and in growth. So we decided to pay some dividends to our shareholders, just like $1.3 per share, only 12% of net profit. It's not a lot, but it will definitely increase the return on equity, our stock price, and our earnings per share. That will increase the shareholder trust and expectation, and we will have a high points on the global scale.
Sure.
Okay, I'm gonna talk about the corporate citizenship strategy. Okay, so overall for years 8 to 12, I believe we had like a well-rounded strategy and plan on how we worked with this. We always provided charitable contributions, environmentally friendly materials. We try to invest a lot every year in renewable energy program, which until year 12, we ended up doubling this investment. And we try to like enforce on-site children and employee facilities and safety and lighting improvements, and always encourage the supplier code of conduct. So basically, since year 8, we went like yes. And I think like since like year 8, we knew like this would improve a lot our like overall brand reputation.
Right.
And it actually did work, cause next slide. We earned the Corporate Social Responsibility Award twice in
Right.
year 9 and 2012. And also this helped us rank, like you can see our spending increased a little bit every year, but this means we were like on the high average industry of, like we did invest our money here. And this also showed in our stronger image rating. We always had a strong image rating, and I think mainly it was also because of this. And we always demonstrated a long-term commitment, as I told you, like since year 8, we knew we wanted to have this, implement this. And it helped, like we were always like a good company and a company committed to like offering this corporate citizenship and responsibility.
And just for the part, I want to apologize in advance. Anything said, written on the slides, like, it's not tend to be offensive. It's just like facts, numbers, analysis that we observe in the stages.
You're talking about the other teams, right? Not me, right?
Also TV.
Oh, okay.
Yeah, so we're gonna start. So we divided into 3 stages. So the first early stage, you'll always see the market leaders here. It's just an icon, like just to show you. So we observed like PQ, price, advertising. We were comparing ourselves, like benchmarking all the time, and we figured that although we are good on PQ, C was always the price leader. Like their price was always like the lowest, but then if we try to imitate their price, we won't earn any money, which explains why, because our cost was too high in the early years.
Right.
So in the early game, we thought C was like very competitive, and we were very like threatened by Team C, and we thought that Team C's conversion is also very, very efficient. Like see how their spendings with everything, it's like your results like is better than the things you put in, so it's like very efficient. And then we thought that there was a threat for every team, because Team B, you guys did really well for the Europe, Africa, and Latin America markets. Like you guys had biggest market share. But we thought that this was very impressive because, you know, Europe and Latin, they were very different markets because
Right.
the spendings, everything's so different. We really wanted to know like how you guys can be market leaders in these 2 different regions. Yeah, moving on to the next stage.
What's your definition of market leader, by the way?
So I just
Market share?
It's like year 6 to 7. I
No,
just-
what's the definition of that?
market share?
Market
Like
share.
who is the market,
Okay.
who has the biggest market share over these 2 years? I just kind of averaged it and
Gotcha.
these are the results. And then the mid-game, same measurements. I'm just going to talk about the analysis part. So B thread still, you guys are doing really well with Europe, Africa, and Latin. But most importantly, you guys exceeded us in the cameras market share in year 9. And we were very concerned because we thought we were very confident with our camera markets in North America.
Right.
And then that's when we had to be flexible. We had to change. And although we were uncomfortable at first, we still decided to change. And then see, they kind of became, although they're not on this list, but you know how they're like always second place in all of these regions. Like, and the first market leader and second market leader, like their market share percentage difference is by like less than 1%. So you can see that they have become like a global leader in like all of the regions, and that was like really impressive, and we really wanted to know what you guys did. And then the last stage is where Team A, which is us, next slide, did pretty well, I would say. This is where we changed everything. We changed our pricing, we benchmarked, we did everything we could. We upgraded our advertising, and then you can see that the analysis part, like the threads, became a little bit more like neutral. To address that, we did pretty well in the end game, but still, C was always a competitor to us. We were always benchmarking to your data. Like every year, we would look at your data and see, okay, how can we change according to that? Because you guys are the market leaders.
Gotcha.
And then for drones, we only did it for years 10 to 12 because before year 10, we didn't think that we had a really big rival. I would say there are competitors, like everyone is our competitors, but there aren't obvious rivals because our PQ, our pricing was like, we were an outlier in in the market for drones.
Gotcha.
And then, but for year 10 to 12, something changed in year 12 is when Team C raised the price of the drones, which I thought was very interesting because our PQ was higher and Team C's PQ was like lower than us, but the price is higher, but their market share was like still second place. We thought that was the biggest rival because we thought that at the end of the game, like even though everybody is going to be raising their, like no one will come close to us. That's what we thought. But when Team C did this, we actually, this is one stage like where we were really looking at your pricing and we actually changed our pricing from yours data. Like for example, you guys did, I think, we would like copy your data, basically. That's what we did, just being honest.
Oh, okay. Well, nothing wrong with that.
Yeah. And
Public
then
knowledge, so to speak.
Evolution, let's go into it because I already talked about it a little bit. I'm not gonna go too detailed about every single metric that we talked about, but basically for cameras, we thought quality was very important. That's why we put a lot of money in product design. We talked about this over and over, but what matters the most is value. So the best cost is not about the best quality, is about the best value, and the best value doesn't equal best quality.
Right.
It's what it means to the
Right,
customers.
right.
We realized that, and that's when it's a turning point for us. Year 9, we started. Everything started to operate through smoothly. And for drones, it was kind of the same thing because we thought like premium product, it's like high everything. We have to make it premium, but it's not like that. Like premium is about how we define it and how we want to address it to our consumers, and our spendings and our pricing, they have to match. Otherwise, we're gonna lose market share like in the early years. And towards the end game, for cameras, of course, we have like achieved the highest PQ. I think we did, if I'm wrong, don't be mad. And then we also controlled a lot of cost. And then I would say that in the end, for cameras, we fully implemented our best cost strategy, like pretty well, because you can see the graph mentioned earlier. Our cost was lower than the average, but our PQ is still higher. And then for drones, I think we also maximize because it's all because of Team C's raise to the price, I would say, because we wanted to make a premium product, but also we became the best value somehow because we had higher PQ, higher warranty, but lower price. Yeah, but
Sure, it makes sense. Right.
yeah, it makes sense. And conclusion, lessons learned, last part. We did it in 2 sections, what we did well and what we missed. So what we did well is that year 7, we were very struggling with our drones, and then we adapted very quickly, like we were always eager to change, flexible. And then benchmarking, we were always comparing to the market, to the industry average, everything, like product design, marketing, everything. And then we meet weekly, like 2 times a week. One before class, one before the year, like 11:55 before Wednesday, we meet again. And then this is, teamwork is very important, and we think that this is one of the successful metric. And then last but not least, 10 to 12, we realized that marketing was an important part, and then we added more money into it, and that was also very important. Most important part, like what we missed. So obviously in year 6, we entered the market, the drone market, too aggressively. Like it was too off, I would say. So you can see like average PQ was 4.2. Ours was 6.0. So obviously that was a bit off. And then drone product design, said earlier, spent too much money. We did carbon fiber, if you guys know that, in the first year 6. And then for advertising, it was way too low in the early stages. We would say we never realized that that played an important part in market share. But in later years, we think the adjustment can be made a little earlier. Like it was made pretty late, like year 10-ish. And for the market share, we always focused on market share. But learning from Team C, we realized that market share is not the most important thing, because being the like second market leader can also be very profitable. We don't need to give up that much profit margin just for market share. And then lessons learned, we need to be flexible, especially for change. I spelled it wrong because if you see a problem like that, you have to change it. Don't be a shoulda, coulda, woulda person. And then second one is team knowledge is always greater than individual knowledge. Come together with a team is always gonna work better than your individual.
Also, we learn to always be consistent, especially in social responsibilities, not only for other companies, but for our employees, and to always have a good brand reputation, and to always benchmark. Like, we spend every year seeing the competitors, seeing the industry average, and from that we gain like the most knowledge, and that's where most of our decisions came from.
And don't give up easily. Like we are really struggling at the beginning, and after that we're not giving up, like sticking to our strategy, and finally we make some success in the end. And do not treat every market the same. Different market, they have different customer, different people, different costs. So don't do that.
And that's it because we are consensus.
Okay,
Yeah.
yep.